The next big thing for retail is the suburbs. According to the Wall Street Journal, shopping center owners like Philip Edison, who we were just talking to, site centers, they're all hitting new highs when it comes to leasing and occupancy. My next guest was quoted in this piece and says the scope of retailers looking to make the move from the city to the burbs is pretty wide. Let's bring in Dana Telsey. She's the CEO of Telsey Advisory Group. Dana, welcome.
Thank you.
So I look at Philip Edison. We just spoke to the CEO. They're already at a 97.5%, occupancy rate. Where do they go from here? So sometimes can they only go down? But then how far down can they even go?
Well, one of the interesting things is there's a lack of new shopping center development. So you're seeing retailers of all types flex their footage and want to be in the outdoor centers. And let's not forget about hybrid work, because that's also giving an opportunity to get more footsteps and traffic. So whether it's Macy's, whether it's the off-pricers, whether it's the dollar stores, whether it's furniture stores, going outdoors is of interest. It's the top malls and it's the outdoor open-air centers that are really driving traffic.
Is it just been that these open-air centers haven't had a refresh in a while? Is it the movement of the population out of the city center?
It's that. It's the movement of the population out of the city center, and it's them working remotely. If they're home on Mondays and Fridays, or Monday, Wednesday, and Friday, when they want to get something to eat, pick up a pair of socks, there you go. It's a destination, and it's a time for socialization.
And even the medical, as he said, some of the med tech places coming in, you have that time to go to that appointment, maybe fit that into your day. Give us some other retailers, some stocks to watch that you think could benefit here, especially as we head into what could be a difficult macro.
You want to watch the off-pricers. The off-pricers are going to get the benefit of potentially a trade down, but also their value offering. I think there's other names that are of interest, too. When you think about the changes that are happening in the department store space, Macy's is flexing and becoming more modern than what they had been in the past. And then you think of, frankly, look at the cosmetics, look at Ulta, and you think about where they can go in conversation with this retail real estate venue. You're looking at Ulta being able to be open air, being able to go smaller also. That's going to be of interest. And cosmetics is showing strength.
It continued. That's one area post-pandemic you might have looked for a reset, but there's still that kind of underlying sort of longer-term strength there. It's probably too early to break out the recession playbook, but I would imagine you're already thinking about it. What's priced into a lot of these stocks? What magnitude of a downturn, or any downturn? Or are they hoping, like we heard a lot of the commentary, that maybe the consumer's only going to be soft and we'll make it through the next couple of months just fine?
The interesting thing is today, with earnings being reported, we're hearing from almost everybody that beginning in the middle of March through April, and frankly, it seems like into May, the consumer's softened. Demand is softened, the consumer is softened. Essentials and value and grocery, you look at Grocery Outlet yesterday, are where the action is and what the consumer's focused on. In terms of what's priced into the names, I'm concerned about the hockey stick guidance for the back half of the year, because if it doesn't come to fruition, you're going to have a reset. Second quarter guidance, for the most part, is with conservatism because you're in the second quarter already. But watch out for the third and fourth quarter, because I think while inventory levels are lean, I'm more cautious on what the level of consumer demand is going to be, given the uncertainties with the macro.
Absolutely. We just saw that B of A card spending data, April down year on year for the first time in 18 months or so. So finally, then, do you think that the core kind of urban center is going to continue to underperform, or if the labor market gets weaker, will that actually pull people back into those areas and help some of the, that mix shift do better than the suburbs? Or do you think the trend to the burbs is going to be overwhelmingly here to stay?
The trend to the burbs will continue to be overwhelming, but don't count urban out and don't count cities out, because we're going to get some tourism. The return of tourism, particularly from overseas visitors, is going to be a benefit. And the other thing you're seeing with urban, while people may not be going to work, they're going out to restaurants, they're going to shows, they're going to social occasions. Is there a stock you'd mentioned that you like in that kind of broad category as a result of that? When I think of the urban areas and who's going to benefit, you look at Tapestry today, and they're going to benefit more of their own DTC operations with stores. That'll be a beneficiary for them. And I think about others. You look at LVMH. If you haven't been to the new Tiffany and that Tiffany landmark, it's certainly something to see. And I think you're going to see a ton of tourists go there. All right. Dana, appreciate your time today. It's the encyclopedia of retail knowledge, truly. Dana Telsey.